What's going on, everybody? Welcome back to the channel. I appreciate you stopping by. If you don't mind, like the video, subscribe to the channel, and leave a comment down below on what you think of the content that I'm putting out. Whether you like it, want to use it, try it in your own trading, hate it, think it's a bunch of bullshit, or just want to make fun of a bald guy. Uh, so uh, Today I wanted to come in and talk about how to easily uh, figure out your position sizing for your trades because not every trade is going to be able to go in with the same amount of contracts um, and the same stop loss placements, all that good stuff. And to try to figure out, I'm I'm entering here and market structure is here. How many points is that? How many contracts can I trade for that? And doing the math for those of us that trade on a smaller time frame chart, such as the 2 minute or the 1 minute, you just can't figure it out that fast. You might miss the trade if you're trying to do it in your head. Some people are really good at math and can get it done. I don't math that well in my head. Okay, so I need an easier way to figure out how many contracts can I take in this trade and stay within my risk parameters um, and be safe as far as that goes. So let's get on over to the charts and I'll show you the real quick, easy way I do it. This is going to be a pretty short video, everybody. Um, I do it by this indicator here called ATR, average true range. Okay, this gives you the average price differential of every bar aggregated over so many bars. I think this one runs at a standard 14. We can check that out just by uh, clicking on it, going to settings. Yep, 14. Um, so I'm looking at this to tell me how big the candles are on average. What's the price range of an average bar? Okay. So right before in the pre-market, we're way down below 20. But I know when the New York Open comes, that number is going to expand quickly. Okay. And I know from experience, unless we just have a really small ranging market right at the open for whatever reason, that we're going to expand those candles. And as you can see, I mean, we popped up for the average candle was 53 points. Okay, now my stop loss that I like to take for 5 contracts, which is my standard trade, is 50 points. That allows me a $125 loss per trade on a $375 stop loss, daily stop loss, which allows me 3 losers in a row before I'm locked out of my account for the day. Okay. Um, so, you know, and this is a typical New York Open for a while now. We haven't gotten too crazy above 50 and a 50-point average, but the very first opening bar here is like 137 points. So how do you handle that? Well, number one, I know that typically our average is going to jump up at the open to around 50 points per candle. Now that's the average. So my 50-point stop loss isn't good enough because an average means there's going to be bars that are bigger than 50 points, and there's going to be bars that are smaller than 50 points. So if I'm going to be taking a trade in the first hour of the day, um, I'm basically going to have to start with 2 micros instead of 5. That's going to give me a wider stop, okay? Because I'm still going to risk $125, and I can even pull that stop up according to market structure or according to my entry, because a lot of times I'm entering on a fair value gap. And if I'm in 2 micros, I've got more than enough room to cover that fair value gap that I'm entering on, and I can bring my stop up, and I actually greatly reduce my risk sometimes um, to about $30 to $50 instead of 125. which allows me more trades during the day as well. And so if that trade works out in the first hour of trading, then I'm also looking for places to add to my trade once I'm in profit, so that I can get up to that five, six, eight contract micro contract trade. Now, after the first hour of the market, I know that the average bar is going to start coming down. Okay, and it takes a while to get down, but you can see, you know, around the 10:50, 11 o'clock area, um, we're down around 40 points per candle. Okay. Now, because I can also look at the previous price action from there, and we can see the big candles, the big moves, and then candles start getting a little smaller, and then they start staying pretty much an average size, and then you get, you know, a little smaller along the way. So once we're in this little trend right here, if I wanted to go short, I know that my 50-point stop loss is going to be more than enough. And you could just test that theory by taking a candle. Let's just say we want to get on this, before this pullback happened. We're looking at the candle size like, okay, well, our candles are starting to look about the same size candles for each candle. So when this one pushes down, well, let me just see. Oh, that's the wrong tool. Shit. We'll grab our ruler and we can just take a look at that candle. How big was it? 47 points. Well, that's a bigger candle than these last six or seven candles right here. So 46 points is going to be one of the larger candles at the moment. So I know that my stop is safe at 50 points. So now I'm thinking, okay, now I can go into my five contract trade because I know at this time, even the average is down around 47. Okay. But the average seems to be getting normalized. Okay. Um, and then the average actually drops, all the way down to 35, where now I know for sure, you know, I can handle a candle a little bigger than 35. Can definitely handle a candle less than 35, and I can handle the 35 candles. So that's kind of how I look at it. And of course, like I said, if I wanted to get in on that first pullback after we got into a trending state on the 9 EMA, and I wanted to get in off this top tail bar right here, a- and I go to use my YM stop loss. What the hell? Why is that? Oh, because it's a short. It wasn't right. Okay. So my stop loss is going to be set at 50 points. Okay. And lo and behold, that covers the top of that candle. And that's all I want covered. Okay, if price goes back above that, we're back above the 9 and we're breaking a topping tail bar candle. So I'm wrong at that position and I need to wait for another entry. Um, and then I'm looking for a 100-point target, which we hit pretty quickly, right? Um, right there on, well, nope, not on that one, right on that candle. Okay, and that is, wait a minute, I know this damn shit. It told me. Oh, okay. It's Trading View. I think my top one account tells me how many bars that was, but yeah, we entered the trade at 10:50. We're out of the trade at 11:14. It's 24 minutes. Okay? And I'm out of the trade. So you don't have to be a genius. Set a typical stop loss that will cover structure, or at least with my system, I'm not looking at structure. When I enter on a bar, a specific kind of bar, like a fair value gap, or a top or a bottom tail bar, or a boom candle, um, a clearing bar, whatever. Um, I'm expecting to put my stop loss at the other side of that bar, and that's all I'm going to risk. And that just so happens a lot of times through the early morning hours, that usually my 50 point stop loss will usually cover that. Okay. Now, if I'm looking to get out on a fair value gap, basically what I'm doing is when we retest a fair value gap and then we get let's just say we got a bearish fair value gap, we push back up into it, hit the midline, and then get a bearish engulfing candle. I'm looking to get in on that bearish engulfing candle when I get a color change from green candle to red candle. So as soon as the red candle takes out the bottom of the body of the green candle and the body, not doesn't have to be the entire candle, just the body. As soon as we break the bottom body of that green candle, I'm entering the trade there. My 50 point stop loss will typically cover that trade. Um, there are times where I may need to push it up a little bit, 53, 55 points. Anything more than that, if it's that big of a candle, I'm just hoping that it doesn't come all the way back on that candle, that it holds the 50 to 75% of that candle and then can reverses for the continuation. Um, I'm just not going to push my stop loss that much higher. I don't want to lose more than 150 a trade. If I have to open my stop up just a little bit on the first trade to $150, then now I only have two trades on the day. Okay, because I just uh, self-imposed a $300 daily loss limit instead of a $375 daily loss limit, because I only have two trades to get into that $300 range. So yeah, that's pretty much it. That's all I wanted to cover tonight. So it's a real easy way to keep track of your stop loss. Remember that ATR is an average. So whatever the average is for your asset in the first hour of trading from 9:30 New York time to 10:30 New York time, your stop loss needs to be wider than that because you are going to have larger candles than the ATR, which is an average, and you're going to have smaller candles as well. So um, that's why when my ATR on YM is up around 50, I want a 100 point stop loss. It's a pretty good general rule just to double the amount of points you're looking for out of your normal stop loss and cut your size in half during the first hour of trading. That'll keep you within your risk parameters. It'll keep it'll preserve your capital when you if you take losers, and you won't be over risking yourself um, and blowing up accounts like I used to do all the time. If you do have to go in with a smaller size because of the ATR, then look for a place to add to your trade once it's going in profit. Um, I think one of the best habits a trader can have is to add to their winners. So um, that's it for me tonight. Until tomorrow morning, I do stream every day, uh, live trading at around 9 o'clock in the morning. Um, that YouTube stream does have a 30-second delay. So if you would like to see the zero latency um, day trading live, excuse me, um, then you can come over to the Discord that I'm in, and I stream there in the mornings as well, live, and there is no latency there, no delay, so you will be able to see it in real time. I'll leave the link below to the Discord, and I myself use Top One Trader. Um, sorry, not Top One Trader, Top One Futures. Um, for my evaluation accounts. They've got some great accounts, great prices, fantastic rules, um, and they're very quick with their payouts. So uh, I'll also leave a link down there if you decide to grab uh, a new evaluation account or a new straight to funded account here in the not so distant future. I would strongly advise that you go check out Top One Futures. And do your research, look through all the rules, look through the payout structures, payout rules, all of that. If it fits what you're looking for in a prop firm, I would greatly appreciate it if you just use my link down there to go check them out. Until then, I will see everyone tomorrow morning. Stay blessed.